Hi, Warren Tarl, Tarl Accounting, the tax strategist, and today we're going to talk about privacy. Well, probably better stated, the death of privacy. When clients come to us, they generally have three reasons why they want to form entities. They want asset and liability protection, they want possibly better tax treatment, and personally one of my favorite things, and a lot of people want privacy from their entities. But from now on, we're going to have to talk about the two biggest reasons people want to come, because guess what? Privacy is really a thing of the past. And the reason it's a thing of the past is something that's just coming up. It's called the Corporate Transparency Act, or CTA. The Corporate Transparency Act was designed to prevent money laundering. The United States went to all these other countries and we were pressuring them to stop money laundering and stop criminal activities going on. And as we were applying pressure to certain countries, a lot of them turned around and pointed their fingers right back at us, and they said, hey, the United States, you're the problem, not us. You've got all these thousands and thousands of entities, business entities in your country, that you have no idea who the owners even are. So Congress was forced to create the Corporate Transparency Act. I'm going to tell you what the penalty is right off the bat, because I wanted you to know why you need to pay attention to this. So failure to comply with any parts of the CTA will result in a penalty of $25,000. Okay, now you know you need to pay attention, right? You say you've never heard of this before. With such a big penalty, you'd think you would have heard of it before. Well, it was kind of created in the dark. It was buried in the Defense Authorization Act of 2019. And those of you who know, this Defense Authorization Act passed pretty much near the end of the year. And what happened right after that? Well, COVID hit and most of the government was shut down. So there weren't able to work on the regulations and the details of how this thing was going to roll out until much later. The official enactment date of this bill was January 1st, 2021, and it becomes effective January 1st, 2024. What exactly is the CTA? It says that most business entities in the United States will be required to file a report detailing all the beneficial owners to the FinCEN, which is the Treasury's Financial Crimes Unit. Kind of rubs me the wrong way that they automatically assume that businesses are going to be committing financial crimes. But anyway, I'm not going to start talking about the government too much right now. Who's required to file? Some of you guys will get what I've done here, right? The cool people who are out there watching will understand this. Those of you who don't get this slide right here, go talk to one of your cool friends. Anyway, who's required to file the reports? Or what entities are required to file, really? Because I did say that most, not all, entities are going to be required. Reports must be filed by domestic and foreign reporting companies. Clear as mud, right? Makes perfect sense now. I did say this was written by the government, right? Who else would say reports must be filed by reporting companies? What is a domestic reporting company? Is any entity that is a corporation, a limited liability company, or otherwise created by the filing of a document with the Secretary of State or a similar office. That's pretty much all entities that we work with. A foreign reporting company is any entity formed under the law of a foreign country and registered to do business in any U.S. state by the filing of a document with the Secretary of State or similar office. Kind of covers everything, but you said most. Well, there are some exceptions, of course. Exception number one is any SEC reporting companies like regulated financial services companies such as banks, credit unions, registered security broker-dealers, registered accounting firms, tax-exempt entities, and inactive entities that existed before January 2020. You can read the details of what an inactive company is. But these things kind of sort of make sense, right? Because remember, we said the idea behind this act was so that the government would know who owns all of these companies and who's doing all of these things. Well, if they're already registered with the SEC or regulated banks and registered accounting firms and all these things, they already know that information about you. So that part makes sense. Now, some people, as I've been explaining this to them, first of all, when I tell people about this, a lot of times, a lot of people think I'm lying. After all, they've never heard of it before. And it sounds a little out there even for our government. More and more people, as they're seeing what's going on, are starting to understand that I'm basically telling the truth about what was created. Then the next question is, well, this sounds like it's for big businesses, big companies. It's not for us little businesses, is it? There is a big, quote unquote, big business exemption. It says that if you meet all three of these following requirements, you don't need to register either. And that is that you have more than 20 full-time employees in the United States. You have an operating presence at a physical office in the United States, and you report more than $5 million in gross receipts on the company's federal income tax return, excluding any income from outside of the United States. Clearly, this is not looking to big businesses. This is focused right at you, the small business owner. When you file these reports, we have to report the beneficial owners. That's the whole purpose, to figure out who owns these things. Who is considered a beneficial owner? A beneficial owner is any individual who directly or indirectly either exercises substantial control over the company or owns or controls at least 25% of the company's ownership interest. Okay, what does that mean? An individual exercises substantial control over a company if the individual serves as a senior officer of the company, has authority over the appointment or removal of any senior officer or a majority of the board, or directs, determines, or has substantial influence over important decisions made by the reporting company. And it doesn't necessarily mean that you have to be an actual owner, right? Senior officers and other individuals with control over the company are beneficial owners, even though they really don't own any of the company. There's a lot of room for interpretation here, but remember the penalty. It's probably not worth getting caught in the weeds. I'd rather report somebody I wasn't sure they had a substantial influence or not. If there's even a remote chance they have substantial influence, they're getting reported. What's the timing of all of this? Registration begins on January 1st, 2024. At least that's the theory right now. The plan is that they're going to create a website for you to go on and register information about the companies. And that website is supposed to be available on January 1st, 2024. Those of you who are old enough to remember when the healthcare websites came about might not believe that January 1st, 2024 is going to be the start date. That's what they're telling us right now. And so therefore, any companies that are created before January 1st, 2024, they're going to give you a year to register. So you need to register those companies by December 31st, 2024. So companies that existed before registration begins have a year to do it. If you form a new company, a company created after January 1st, 2024, you only have 15 days to register. If there are any changes to anybody with the beneficial ownership, any of the beneficial owners change, you take people, you add people, you subtract people, people change their last name because maybe they got married or divorced or they moved to a new address. Any information about any of the beneficial owners or who those beneficial owners are that might change, you have 30 days to report those changes. Again, remember the penalty for not doing these things, $25,000. There will probably be some extensions, some grace periods allowed while people are getting used to this whole thing. But that's a big probably. I can't say that's for sure, right? Don't take chances. Why am I telling you all about this now? There's nothing I can do till January 1st, 2024. Well, maybe if you're planning on creating some new companies, you might want to do them before January 1st, 2024, just so you have more time to register and the government has more time to figure out how this whole thing's going to work than the 15 days and be under that gun. Also, and this is a big one, like I said, a lot of people create entities and do entity structuring to help them with their privacy. Privacy is going to be going away. Maybe you don't want to spend a lot of extra money and a lot of extra effort creating a great scheme for privacy that's only going to last a few more months. Where does this information go? The FinCEN is going to share this information with all federal law enforcement agencies, other federal agencies that can express a need for this information. They're going to share it with state and local law enforcement agencies or state and local agencies that express a need for it. They're even going to share this information with certain foreign government agencies, and with your permission, they're going to share this information with financial institutions. Anytime I can see in the future, I can see anytime when you apply for a mortgage or other kind of credit, I can see that they're probably going to be including some kind of statement that you must sign granting them permission to access this information. So privacy is truly a thing of the past. There's going to be a lot of changes to this probably as we approach that date. Plus, we need to learn the website and learn how to do this and who's allowed to do it on your behalf, if anybody. Don't expect your CPA or your attorney or anybody to be on top of you about this. It kind of fits between the lines of everybody. For example, this isn't something your CPA would normally help you with or even normally tell you about, because it's not really in our CPA lane. This isn't the IRS doing any of this. It's the Financial Crimes Division of the Department of Treasury. It's not normally something that would come under our radar screen. It's maybe on your business attorney's radar screen. I don't know. The best thing you can do is, as we learn information, as we figure out how you're supposed to do it and figure out even if there's ways we can help with that, we will let you know. And the best way to stay connected to all of that, to be part of our Tax Think About It email that comes out. It's not a spam email. We just send it out to you when there's things to update you about or there's information to talk to you about. You can sign up for that by going to taxthink.info, or you can just follow us on facebook.com. Either way, it's free. We're going to keep you informed. Thank you for listening.